traders, how are we doing today? It is Thursday. It is the last day of the quarter. Crazy. We have a shortened week this week, so today is our Friday. I can't believe it. I can't believe we're already here. We're already at basically April. Easter is this weekend. For those of you who are not familiar with what we do around Easter time, I'm going to give you a little preview. It's right here. That's all you get. But it is available right now, so if you want to take advantage of it, you can. This morning, or this afternoon, or whatever time it is for you this evening, if you're on the other side of the world, I hope you guys are doing great. My name is Jason Krutzky. It's a pleasure to be here with you. This is another TrendSpider Office Hours session. And in these office hours sessions, we really like to hand the mic over to you guys. You know, everybody who tunes in, you guys are responsible for where we go. We can talk about TrendSpider tools. We can talk about indicators. We can talk about strategies. We can talk about really anything you guys want to for the next hour. Oh, bad sound. Oh, shoot. Guys, holy moly. Johnny, thank you for letting me know. I made a bad adjustment. It should be better now. If that's not better, do let me know. Should I repeat everything I just said? Did you hear a word of what I just said? Ah, that's funny. All right, so this is Office Hours. This is a show all about all things TrendSpider. So this is your chance. What's up, James? This is your chance to ask any questions that you guys might have about TrendSpider. And we can talk about whatever you guys want to. While I'm waiting for you guys to hit me with some questions, excuse me, I'm gonna take a little sip of water here. Johnny, apologies, holy moly. I recorded something yesterday, it needed loud music, and I forgot to change it, that's my bad. I wanted to show you guys, we just announced earlier this week, I believe it was Tuesday, or maybe it was Monday. I can't remember. It was just the beginning of the week. We announced these. These are our free trading and investing calculators. You got spreadsheets in here for trade tracking. So you don't even have to be a TrendSpider trader in order to take advantage of these tools. Just go to TrendSpider.com/calculators. There's a ton of stuff in here. You know, my personal favorite one is the risk and reward calculator. I like the visualization that it gives me. Pretty simple. Just type in your entry price, your profit target, your stop loss, and you can understand very easily the R on your strategy. There are ways to do it inside the platform as well. This is just another tool that's available for you. But if you're a long-term investor type, or you know, you're trying to figure out stuff about compounding or position sizing or whatever it might be, we got free calculators for you guys to use. So take advantage of them. Again, it's at TrendSpider.com/calculators. Let's talk, Arun, about this idea of yours, how to catch stocks that is above the 921 EMA when the 3 MA crosses the 5 MA. Well, that's a fantastic question, sir. So where we're going to start with this idea of yours is we're going to start with a script, because from a script, we can then kind of utilize that script all over the platform. So just for the heck of it, I'm going to start in the scanner. You could start wherever you want that you can write a script. So you could start in the strategy tester, you could start in the scanner, you could start in visual scripts if you wanted to. It's all the same. I'm going to do it in the scanner. So the first thing that we need to do is we need to define that price is above that 921 EMA. And can you tell me, Arun, does the 9 need to be above the 21 as well? If so, let me know that, because that's an important distinction to make. So the first thing that we need to do, I'm going to say condition, I'm going to say price, and I'm just going to use the daily time frame. My guess is you're using something a little bit shorter. We can always adjust the time frames whenever. So I'm going to say daily price close is greater than indicator, daily, exponential, moving average. And then we just come in here and we would change the length to 9. So, okay, 8, that's fine. No problem. We could do 8 too. Do you want the 8 and the 21 above each other as well? I assume you do. So here's your price close greater than 8 EMA. If you look over here on the right, you've got a couple of buttons that you can choose from. This button right here allows you to duplicate this condition. So if you want to also define the prices above the 21, you can duplicate that condition and then just change the length to 21. Now the next piece of this, again, like I said, is the 8 above the 21. I would assume that you would want it to be. So we can use, maybe we'll use a GPT condition for that. So I'll say 8 EMA greater than 21 EMA and say apply. This is going to build out that condition for me. There it is. The 8 EMA is greater than the 21 EMA. Again, I'm going to come in here and just change the time frames to make them all the same. And then you also want to define that the 3 is crossing over the 5. And presumably you want that to be a cross up. I don't know, but let me know and we'll add that. So I'm going to, actually, you know what, we could do this. I'm just going to take this condition that we just made, the 8 greater than the 21. I'm going to duplicate it. I'm going to change this length to 3. I'm going to change greater than to crossed up, and I'm going to change indicator, daily, exponential. Change this to 5. So there are your 4 conditions. You've got price above the 8, price above the 21. The 8 is greater than the 21. The 3 is crossing up on the 5. What are your time frames for this, Arun? Do you have, are they all the same time frame? Are you utilizing bigger time frames for the longer moving averages, shorter time frames for the shorter moving averages? How are you thinking about this? You want to capture the start of the cross over the 3-8. Okay, we're going to change this to the 8. That's fine, you can do that, but I'm saying, what do you want to define about the rest of the stuff? What time frames do you want to use? And that sort of stuff. So here, I'm going to go ahead and just scan for this. See if we can find anything that's meeting this right now. Daily. Okay, so daily for everything. Cool, that's where we're at already. All right, so we got a handful of things. So I'm going to go to the daily time frame here. I'm going to go to my indicators and remove a bunch of stuff that I don't need right now, and then add those moving averages. So EMA, we got a 3, we got a 8, we got a 21. Let's make this 21 red. All right. Zoom out a little. Yeah, that's a little better. Okay, so you've got your 21's in red, your 8 is in green, your 3 is crossing up on your 8 right here. So price is above the 21 and the 8. The 3 is in yellow, crossing up on the 8. Is this pretty much what you're looking for, sir? Same vibe here. Arun, does that kind of get you where you're trying to be? There are other things that we can do here. You mentioned you want to capture the start of the crossover. What exactly does that mean? Because, you know, depending on how you are defining the start of the crossover, we might actually be able to make this even a little bit more specific. For example, we could say instead of the 3 crossing up on the 8, we could say it's within range of by X amount, right? By like a very small percentage. We can say it's really close. Another thought, 3 still not crossing 8 for MO. Sir. It's 1 cent, sir. 1 cent. Do you want the, what exactly do you want? So like, think about this. If you, okay, this is an important distinction. Hold on 1 second. Let me say, greater than? Oh no. Hold on, I'm just putting this back into place. Okay, so this is a really important thing that you've just brought up. Very, very important. The current candle toggle, this guy right here, the current candle toggle defines that the conditions that we have defined are true on the current candle that's forming, okay? And so what that means is it's looking for this daily candle, for the cross up to be occurring on this daily candle. If we need to absolutely see a candle close with that cross, then we need to have our current candle toggled off. The reason being, if your current candle's toggled on, then at any point, these conditions could or could not be true, right? Hold on. You're saying the candle crossed the 3 and the 8, or the 3 and the 8 crossed one another? That's a totally different story too. You want price crossing them, or do you want them crossing together? Yeah, I get it, but you got to give me like the real specifics, Arun, because the 3 and the 8 crossing is one thing. Price crossing the 3 and the 8 is a different thing. That's two totally different things. So which one is it? Which one do you want? Do you want the price crossing above them, or do you want them crossing each other? You see what I mean? See how the difference there? All right, so getting back to what I was saying, with the current candle toggled on, it's going to look for those conditions being true on the current candle that's forming. However, at any time throughout the day, this could change, right? If Mo all of a sudden gets some really bad news in the next 10 minutes and this candle goes joop down $3, that cross will no longer exist, right? So if you absolutely need the cross to have occurred, then in theory, you need the candle to have closed as well, right? So then you would have wanted to look for the cross yesterday, which if you turn the current candle toggle off, does that. Or you can say 1 candle ago. They crossed yesterday, right? Okay, you want to see price crossing and the moving averages crossing? So today on Mo, you never really traded below either of the moving averages, right? Price is above. So let's talk about it real quick. If you want to say that price has crossed a moving average, there's a couple of ways to do it. You can come in here and you could say indicator, daily, EMA. I'm gonna go with the 3, and I'm gonna choose price has broke through it, right? So price broke through the 8 EMA, but this doesn't define when, or rather, it doesn't define the direction upon which it broke through. It just says price broke through. So it could have been price broke down below it or price broke up above it. So if you're going to define the price breaking through a moving average or any indicator, then you need to define the direction from which it came. This is just defining the breakthrough. You need a second condition to define the direction from which it came. So you can say that price opened. Actually, you could just say, I don't know. You could say daily price close greater than indicator daily exponential 3 EMA. So you're saying it broke through and currently price is above it. So presumably if it broke through and price is above it, then you have a break to the upside. If you have price broke through and then you say price is greater than, or rather less than that EMA, then price broke through to the downside. All right, so if yesterday is better for the 3-8 cross, we're going to say 1 candle ago. We'll rerun this scan. I'm going to remove these conditions just momentarily. All right. So here we're seeing the crosses. Now, the piece about this, I would assume you would also then, the price kind of closing below, or rather closing above, price breaking up through those, you'd probably want to then define also on yesterday's candle too, right? Arun, it's going to vary, right? Like it's going to vary on your exit. And it's going to vary for every single name that you tested on. We could test it for sure, but The probability of win rate for this strategy, you only have, this isn't a strategy. This is an entry. So you would have to tell me what your exit is. And the exit may vary depending on the tickers that you're trading it on, right? Now, TrendSpider does have tools to make understanding probabilities much easier. We just released one. It's called the Strategy Variance Explorer. But again, in order to know what the probability, the win rate of a particular strategy is, you have to have the other side of the strategy. So what's the other side of the strategy? What's your exit? What gets you out? So let me do this really quick. What I'm going to say is, I'm going to say price closed, daily price closed, less than indicator, daily EMA 3. I'm going to duplicate this. I'm going to say, I'm going to change this to EMA 8. And I'm going to make this like 2 candles ago. Price was below both of them. And then I'm going to just say that currently price is above the 3. Because if price is above the 3 now and the 3 crossed up on the 8 1 candle ago, like that gets you everything you want. All right. So this is kind of what you're looking for. Exit when 3 cross down on 8. Okay, cool. So what we're going to do here, I'm going to do like, what do you want to call this strategy? We'll just call it Arun EMA entry. Let's do that. We'll say save. So the first thing I'm going to do for you, Arun, is I'm going to share this with you so that you have it. Excuse me. All right, so here's a scanner for you. You can utilize it however you want. All right, so the next step of this is, remember how I was saying at the beginning, once you script it, it didn't matter where we script it, we can utilize it all over the place. So we've scripted it here in the scanner, but we want to check and see how these names perform, right? These names are the names that are meeting the criteria right now. We want to see how they perform under these conditions. So we want to use the strat tester to do that. So the first thing I'm going to do, I'm going to go on my watch list. I'm going to go add to sidebar. I know this is a little weird, but let's just stick with me. I'm going to search Arun since I just saved that scan. Now I can load the scanner over here into my watch list. The next thing I'm going to do, I'm going to click on the 3 dots and I'm going to say save as template. And we're just going to call this the exact same thing, Arun EMA entry, and say save. Now, inside my script manager, I have it saved. It's written over here. Anything that's listed over here is going to be saved. Down at the bottom, underneath the conditions, there's a share button, then there's a send to button. The send to button is what we want to use. So I'm going to click on send to. And I'm going to send this to the Strategy Explorer as my entry criteria. And so now it takes and it loads, so you can see it, takes and it loads those conditions as entry criteria for a strategy. Now you said you want to exit when the 3 crosses down on the 8 or if you lose more than 5%. So essentially like a 5% stop. So we're going to go to script. We're going to say add parameter. We're going to say condition indicator 3 cross down on indicator 8, and then go to your stop loss, type in 5%. We're going to turn those on. And then what we're going to do, we're going to go to the Variance Explorer. Oops, let's not do that yet. Let's save this. We're going to say Arun EMA strategy. I'm going to crank the number of candles here. So it's going to run the test on just the name that's on my chart. And then what we're going to do, we're going to go to the Variance Explorer. Oops, let's save. And then we want to type in all the symbols that we want to test this on. So inside our Strategy Variance Explorer, I've got my Arun EMA strategy loaded up. And I can choose up to 30 variants, which means I can test 30 things at once. I could test 30 symbols at once. I could test 15 symbols on 2 time frames. I could test 10 symbols on 3 time frames, right? I could test whatever. You do the math. Since you wanted to utilize this on the daily, I'm just going to put it on the daily time frame, and then we could start typing in symbols. Now, if we wanted to, we could pull symbols from the list of names that are meeting this criteria right now. We could type in our own symbols. I'll just throw in some things here. QQQ, IWM, APL, NVDA, and so on. You know, go wild. And what this is going to yield, it's going to yield us a list of the names that we just asked it to test and their performance on this strategy. You've got your net performance, your asset performance over that same period of time, the number of positions, your win rate, your max drawdown, your average return, your risk to reward ratio, and all these different data points that can kind of help you formulate what ticker you should be actually utilizing this strategy on. So just right off the bat, NVIDIA has the best yield on this strategy. The net performance of this strategy is better over the same period of time on NVIDIA than it is on the other names that we tested. Microsoft took the most positions. NVIDIA had the highest wins, or the most amount of wins. Has the highest average return, 3.06%. That's never a bad idea to kind of gauge these two values to see if there's actually any alpha there. Clearly, you know, buying and holding NVIDIA for this percentage is quite better than your percentage yield on this particular strategy for that particular name. So the Variance Explorer allows you to test a bunch of things at once to see that kind of breakdown and go, oh, if I had to pick one, this is the one I would pick based on its net performance, its average return, its risk to reward ratio, its return relative to the asset, right? That sort of thing. But you could also just kind of go down this list, because remember, these are the names that are actually meeting this criteria right now. So maybe you want to pop through this list and say, all right, well, let's see. Of all the names that are meeting the criteria right now, let's see if we can find one that actually does perform pretty well when these conditions are met. So I'll do that. I'll just kind of pop through here, see if we can find anything. My guess, Arun, is that your moving averages are too short. That's my guess. And I could be wrong about that. But the 3-8 cross down to me feels like you're going to miss out on some things. Like using the 3-8 cross down as your exit feels like you're not going to get the meat of the move that you're looking for. And it might actually serve you better to look for maybe like, I don't know, maybe the price closing below the 21 or something. You might want to use like you're using a short-term time frame to get you in, and you might want to, if you're looking for a swing trade, right, you may want to utilize longer time frame exit to get you out. So, you know, just a thought. And what I would recommend, Arun, if I were you, is I would play around with exits, because your entry strategy may be great. One thing that you could try too, I'm going to just remove this just for now. Try this. Start here. Start with number of candles have passed, just to see, you know, and play around with time as your exit, as opposed to like some sort of technical condition. Play around with time as your exit to start, just to know, just so you can like look on the chart and see, oh yeah, okay, it gets in here, and this is kind of what tends to happen after a period of time. I'm not saying you're going to find alpha in that. I'm just saying, like, you know pretty strongly what your entry is. And I think that the exit is causing you to get out of this trade too soon. It's like tamping down any sort of return that you would get from it, is just based off of clicking through and seeing, because I'm just looking at the performance and I'm looking at tabular data here just to kind of gauge how does it do, you know, on this particular name. 216% profit versus buy and hold of 931%. So it comes nowhere near beating buy and hold. Only 33 positions, so not many positions on this particular name. Your win rate, 76%. And you had asked about win rate, I believe. What's the probability of win rate? Okay, so this is another really important thing to understand. Win rate does not equate to profits. Just because a strategy has a really high win rate does not necessarily mean that you're going to profit a ton from it. In fact, what is often the case is that as win rate goes up, the amount of profit that you get goes quite down. That's just kind of the natural way of things. And so what you might actually want to be more thinking about are things like risk to reward, your average return, not your average win percentage, but your actual average return per win. And remember that as your win rate goes up, generally speaking, the amount that you stand to gain goes down. As your win rate goes down, maybe I'm not saying this quite right. Win rate does not equate to profits. A higher win rate does not necessarily equate to higher profit, is really kind of the point I'm trying to get across. So as your win rate goes up, your need for profits goes down, right? Because you have a higher win rate. As your win rate goes down, your need for profits goes up. And that's what R is. That's what risk to reward is. It's saying I'm risking $1 to make $1.25, or I'm risking $1 to make $4, right? That's how you think about it. That's kind of where you could play around with this risk to reward calculator, and you can kind of see on the chart kind of like how different risk values affect your overall R. So yeah, so I would start with time, and then I would start playing around with, if I were you, I would play around with slightly longer exits that allow the trade to work, because I think your 3-8 cross down is just too fast. Trade success does not equate to profitability. That's right. Right. Exactly. Be moly. That's right. So really I think the goal is finding a nice balance. You can win. Think about it. Like if your R, risk to reward, is 3-1, then in theory, you could win if all else is equal. And every single time you take a trade, you're using a 3-1 risk. Then you only have to win 1 out of 3 trades to break even, right? Because you're risking 3-1. If you're risking 4-1, then you only have to win 25%, 1 out of 4 trades. If you're risking 1 to 1 1/4, then you got to win way more. Hold on one second. Sorry, I just got a quick question from a colleague. I got to answer this really quick. Oh, okay. Okay. So yeah, that's how I'd be thinking about it. In this particular, here, we just found one, the second name, actually. This particular strategy, if we just use time, just a 30-day period, a 30-day candle window. So you're saying you're getting in on all those conditions that you defined, Arun, and then you're getting out 30 candles later, irregardless of what happened, just 30 candles later. And this strategy actually performs pretty well over the long term. It beats buy and hold by almost 110, 112%. Not bad. No-go highlighting over here. Your win rate's 58%. Your average return, 2.5%. Your risk to reward ratio is 2.07. So this means that essentially you got to win every other trade to stay even. And this successfully does that. Like this wins 58% of the time. So it's more than that minimum 50%, right? All right. So what I'm going to do, Arun, if you want to, I can save this strategy and send it to you. And then you can have this and you can jam around on it. You can change it however you want to, try different things. Like I said, I think starting with time is kind of interesting just because you can pop on the chart and you can actually look at your entries and exits. So when we zoom into a section of this chart, All the red areas are where you got into a trade, it went against you. All the green areas are where you got into a trade and it went in your favor. And so, you know, if you're trying to swing trade, presumably you're trying to kind of stick with it for a period of time. You're trying to capture long durations of the move. You want to be avoiding sections of the chart that look like this, right? Because you're a long bias, is a long bias swing trade. You don't want to get stuck. So you want to make sure that your strategies aren't trying to go long in conditions like this, which they're not. That's good to see. Are they going long at tops? Are you finding them going long at tops? They went long at a top right here, long at a top right here, long at one 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 right here, right? Like, that's kind of interesting. Maybe you also then want to throw in some sort of stop loss to add to this time piece. Or maybe you want to, you know, during this section, looks like you took a bunch of trades during this section. You can see all the little areas of green. Maybe you wanted to try and capture more of this move in one fell swoop. Well, if you think about your moving average idea, think about like long moving averages, the 100, the 200, these sorts of things. What if you played around with like 100 period moving average that perhaps price is just kind of, and I don't know where the 100 would be relative to this section of the chart, but this is a very strong section of the chart. Perhaps if you were using a 100 length moving average or a 50 length moving average as your exit, price closing below it or something like that, maybe you would be able to capture bigger chunks of periods of the chart that are kind of up only, as opposed to this time idea, right? By using time, you can kind of see where your strategy gets into trades and what the chart has done historically when those conditions were met. And then from there, you can kind of start to gauge, you know, you could start to kind of think a little outside the box about what is causing you to get out. So hopefully that's helpful for you. I'm going to send you this. Actually, what we could do even, like, here's that section of the chart, right? Like, let's just throw... Just going to add one more, and we'll make it like the 100. I just want to see kind of where the 100 is. Yeah, so see, during this whole period of time, price never gets below that 100 period SMA. So maybe you want to use, I don't know, maybe you want to use like a 50, or, you know, you have to play around with it to see. You don't want to curve fit too much, but look at this 50. Like, this price is like really nicely riding the 50. So like maybe you're using your idea for your entry as your entry, and then you're using like multiple closes below the 50 as your reason for getting out. That way you can kind of like really capture bigger chunks and you know, less stress, less trades potentially, and potentially a better profit. I don't know. We'd have to play around with it and see. You'd have to try. Let's just do it just for the heck of it. Price close greater than indicator exponential 50. And like I said, multiple closes. So I'm just going to duplicate this. I'm going to say 1 candle ago, 2 candles ago, 1 candle ago, 2 candles ago. So this is saying 3 daily closes below the 50 is what gets us out. I don't know. Maybe that'll help us. Maybe it won't. I really don't know. But this is where you kind of start thinking about stuff. You start just trying stuff and experimenting, and you might find something that works. In this particular case, we found something that actually doesn't work at all, you know, and that's how it goes sometimes. Sometimes the ideas simply don't work. So play around with it. Play around with it. That's what I say. And hopefully this has given you some thoughts on how to play around with it. I'm going to rerun this, and then I'm going to send this over to you. Have you made any strategies on Ichimoku? That's a good question. I think that I have. Let me see. Hold on. I'm going to tell you, I'm going to be honest. Ichimoku is a bit, is a little bit outside of my wheelhouse. I don't have a really good understanding of it, but I know that I've built something for it. Hold on. Let me see if I can find something for you, Molly. All right, so Arun, here's that strategy. And anybody else who wants to play around with it, feel free. I'm just going to do some hunting really quick for you. Okay, so I'm not going to go into too much detail about this, Molly. However, here you go. Have a read through this blog. Now, this was written quite some time ago. This was written quite some time ago, but there's a little bit of information in there, and it should help you gain a little bit of an understanding of kind of how to utilize Ichimoku in the strategy tester. It can be done. Mr. Worldwide, is there any way to display relative strength relative to SPY or other indexes? Yeah, so have you played around with the two new indicators that we just released, Dorsey and Mansfield RSI? So the first thing I'm going to do, Mr. Worldwide, this is for you. The Dorsey Mansfield RSIs. These are two relative strength indicators that do exactly what you're looking for. So this is the Dorsey RSI. And this is the Dorsey, this is SPY plotted against Apple. So here's Apple. Here's Apple's relative strength relative to SPY. So essentially, like during this period of the chart, Apple was increasing, SPY was increasing. The charts are moving in tandem. They hit essentially a high, they reverse, and they're still pretty much moving in tandem until Apple's equal high here at the end of this like second period. Now notice how the highs on the Dorsey indicator are not the same, right? The high here is lower than the high here. And what this means is that the index, SPY, is outperforming Apple. When you have that lower high here, it means the index is outperforming the asset on the chart. And then, of course, as Apple has sold off, the indicator has decreased, meaning Apple has continued to underperform the index. Mansfield, a little bit different, but kind of similar, utilizes Dorsey in its calculation. And it's the same kind of idea where you're tracking performance of the asset relative to the index. So this is the Qs relative to NVIDIA. These peaks are like strong outperformance. When it comes to the zero line, it's essentially like equal performance. Below the zero line is underperformance relative to the index. Troughs, deep troughs, are deep underperformance relative to the index. And then, so this period, it's outperforming. NVIDIA is outperforming the index, specifically kind of in here. Like, what is this? This is like fall of 2021. That overperformance kind of starts to wane all the way into like March of 2022, where it's essentially performing equally. You get a little bounce in performance, and then it starts performing negative, inverse to the index. These little bounces here where it taps the zero line, those are periods of equal performance, and then it starts to outperform again. And then the rate at which it outperforms determines the rate at which this indicator creates higher peaks or lower troughs. Does that make sense? Is that not what you want? Did I just go through all that and it wasn't what you wanted? Oh, yeah, so those indicators are custom indicators, Mr. Worldwide. And throughout this blog post that I've just linked you, there are links. So you need to actually add them to your account. So click on Dorsey Relative Strength, come over here and just add it to your account. Okay, cool. It's exactly what you're looking for. Wonderful. So yeah, so you just need to follow those links. Follow those links, add them to your account, and then once they are added into your account, they will appear in your indicator list here. Dorsey and Mansfield. I'm just going to change these colors so we can see them a little bit more easily. And then I'm going to remove this. And inside of the indicators, yeah, no problem, Mr. Worldwide. Inside the indicators, click on the 3 dots to change the index. Right here. So just change it to whatever index you want. And you'll be good to go. Now, I will say Mansfield relative strength, this particular indicator was kind of popularized by Stan Weinstein. And he suggests in his book, what's it called? I have it sitting on my desk. Secrets for Profiting in Bull and Bear Markets. He suggests that you utilize the RSM, that's the Mansfield relative strength, on the weekly time frame. So that is what that is what we suggest, because that's what he suggests. But yeah, hopefully that gives you what you're looking for. 2 different kind of readings of the same kind of thing, but 2 different ways of looking at that concept. So we've got a few minutes left, you guys. Maybe like 15, 20 minutes. Yeah, big fan of Stan. I mean, how can you not like this guy? Look at this guy. Look at this man. Look at that face. All you can think of is Step Brothers. Worldwide. So we got like 15, 20 minutes left. We always do about an hour for these shows. Does anybody have any other questions? We got a long weekend ahead. So I want to make sure that you guys, you know, hopefully some of y'all, while you're celebrating the holiday, spending time with your family, hunting for eggs, touching grass, as they say. Hopefully you're also going to be spending a little bit of time doing some technical analysis and digging into TrendSpider, kind of learning a bit more about it. So I'd love to, I'd love to give you ideas that you can play around with if you have specific questions, that is. Yeah, Stan is. I've been really paying a lot of attention to Weinstein stage analysis. Something that I've been watching, especially, as we saw kind of, over the past year or so, you saw lots of names making mega all-time highs, and then there were a whole slew of names that were like building bases. And so that Weinstein stage analysis coming out of stage 1 into stage 2, kind of watching all of those names that were building bases, names like Snow and these sorts of Coinbase and, like all of those names that just had these like year-long consolidations that then started to lift out of them. We're kind of getting into like lots of names now just well into their stage 2s, but there was a period there a couple months back where we're finding names coming into stage 2 was pretty sweet. Vitra Studios. What's Vitra Studios? Is this a stock or is this a crypto? Blockchain nodes. Huh. Doesn't look like it's available. Vitra is the ticker, VITRA. Oh, maybe because I did USD. I don't know. Awesome, Molly. Well, cheers to you. Cheers to you, sir. I'm really glad that I could answer some questions for you. You know, anytime you have anything else for me, just feel free to hit me up. You're welcome to do that. I'm happy to help however I can. Yeah, I think you might be right, Mr. Worldwide. What about you? Any other questions from you? And there are a few other of y'all here. Speaking of snow, I did see that. Yeah, he bought what, $5 million worth of shares yesterday? Maxlum, what's my favorite trading style? Hold on. I'll show you. You know, I always got to send you guys back to other things just because, you know, I think it's nice to share. Nice to share what we do here. All right, so let's do this. So I am a kind of like a structure guy. Price action, market structure is my bread and butter. That's where I'm at. Fleet Capital. Does TrendSpider have an indicator that identifies stocks breaking out of bases? Sure. I mean, you could, in theory, you could utilize a lot of things. So let me give you a couple examples, a couple of things to consider. First up, in chart patterns, you got a couple of different channels, specifically horizontal. Well, if you come into the scanner, you say chart patterns, you say daily, horizontal top, price broke through it. So you got a horizontal channel, you got price breaking through it, the top of it. That's one way. You could just scan for names meeting that criteria. One thing that I use, I'm going to remove some of these indicators real quick. I use range. You could also use Dungeon channels for this. Range and Dungeon channels are, in essence, the same thing. So range, it looks kind of like a Bollinger Band, right? But it's just a range. So it's a 20 candle range on either side. So it's a 20 candle high, 20 candle low. So, you know, here's a 20 candle high. After 20 candles, it starts dropping to the next highest high. And so you could, in theory, use like price making a new range high, right? As a way to spot a breakout of a range. There's a lot of different ways to do it. You could even do something as simple as like, you could use things like heat maps. Heat maps are going to identify areas where price had previously consolidated. What's up, Gary? How we doing? So Fleet, kind of where my head would be at. I kind of think this is your best. This is kind of like the most efficient. Let's see what we get here. There you go. So let's see where the pattern. Yeah, so here's your horizontal channel, and here's your price breaking out of it. Let me turn off this. Oh, let me turn this off, and let me turn these off. Yeah, so here you go. See, big base, price breaking out. Same deal, horizontal channel, price breaking out. Same deal, horizontal channel, price breaking out. So, Fleet, that's how I would do it. Cup and handle is not a pattern that the platform can identify. But there are ways to utilize it, or there are ways to identify it. And how I would be thinking about it personally is, well, first of all, you know, you could even argue like this is kind of cup and handly. But what I would be thinking about, or kind of how I would be trying to do it if it were me and I were trying to build something, I might think about zigzag. With zigzag, hold on. Zigzag, we can do things like define levels. Ooh, let me change this. Here we go. So you see how you got A, B, C, D, E. So you're defining the pivots via letters. So perhaps one thing that you could try if you're looking for, yeah, Molly, telling you, the scanning for chart patterns is crazy. Like there's so much alpha in scanning for chart patterns. It's actually pretty wild to me how powerful just that one piece of functionality is. Because it's not just finding the pattern, you can define price relative to the pattern. So you can really define what you're wanting to define about the setup itself. But anyway, getting into this idea of cup and handle, because there are, like, how long is the handle? You know, there are just too many pieces in there. But what I would say is play around with defining your pivots relative to one another. Because you can come in here and you can say things like indicator, daily, zigzag. Pivot A is you know, within distance or within range of pivot C. Pivot B is X% from pivot A and from pivot C. Right? So you'd be defining that cup. You'd be defining like where the edges of the cup are relative to one another. You can define where the bottom of the cup is relative to the top of the cup, right? You could then define like price relative to those three levels currently. So you just kind of, I play around with this. I'm going to show you. Actually, so that market structure basics video that I just posted, this one, Fleet, watch this video. There are links in that video to like a bunch of different, I believe anyway. Let me make sure before I say this. Okay. So you want this. There's this blog post that has links to a bunch of different market structure setups. So like essentially they're scans for all these different setups that I talk about in the video. So you can import all of those scans into your account too. Play around with it. And if you spend some time with it this weekend, it might be a little bit confusing to you. If it turns out that it is confusing to you, not a big deal. Just come back next week and we could talk very specifically about it if you want to. I would get into it now, but I only got a few minutes, and honestly, you could probably spend a whole show talking about just that. And so I don't want to cut it short. I'd rather spend some real time. Can you compare performance charts of XLE versus the other SPDR sectors if you have them in watch list? Something like year to date or 1 year. So Gary, are you saying you want like multiple assets on the same chart? That's not possible. But if you haven't yet played around with Dorsey and Mansfield RSI, I just shared links to it, or to those two indicators. Where are they? These guys. The link is just up a little bit. But these two relative strength indicators allow you to compare the relative strength of whatever assets on your chart to that of an index. So you could probably do what I think you're trying to do. Have XLE on your chart and XLF in the lower indicator, or in the lower indicator. So let me just show you really quick. So here's your XLF, or rather it's not true XLF, but like XLE. Here's XLE performance relative to XLF performance. So this might be something that would work for you. One of these two indicators, the Dorsey or the Mansfield. Here's you another link. And then downloading those indicators, the download are available at the top of the blog and all throughout the blog. There are like 10 places you can download these things. Yeah, I mean, Gary, pretty much, we're getting there, man. We're getting there. You can't do absolutely everything, but darn it, there's not much that you can't do. Gary, have you seen these yet? You got fundamentals now. A couple of different ways to view them too. So this lower indicator is like tons of fundamental data points. You can pop on that how-to button and see all of the fundamental data that is now available on the platform. It is a lot of stuff. We're going to do a proper release for that next week. And then over here, there's a new reports widget, which just has EPS and revenue values in it right now. And I'll talk more about this next week. Once we release it, I'll kind of go into some detail about it. But if you want to learn about it, you can click on this question mark and you can learn about what these different charts are showing us and how to read them. And like I said, I'll do a little bit on it next week as well. So y'all, that is about time for me. Chewy, PAL above 90. Let's take a look. I'm just going to turn all this stuff off. That's a tricky chart, bro. Nice little gap fill though this morning, huh? Well, mostly. Yeah, Gary, kind of cool, right? All right, so y'all, last call for questions. Does anybody have anything else that they need answered real quickly before the long weekend? I'll be back again, top of next week. We'll do this again, probably around the same time. Come Monday. We're poking the bear, Gary. We're poking the bear. You don't have to join Discord. Why would you need to join Discord? I mean, be good to have you, but you don't have to. Last call, going once, going twice. If you have enjoyed this show and you want to see them continuing on, it's up to you. It's really up to you. We need more viewership. We need more likes. We need more subscriptions to the channel. So if you are not already subscribed to the channel, please do that so you can be alerted next time I'm live. Please like the video. When you set an alert, what time do you set for confirmation candle and what triggers? It's a great question. Okay, so there's some things to know about this, Mr. Worldwide. So I'm on the daily chart right now, and let's say I want to set an alert for a new high. All right, I can right click on this line. I say create alert. I choose my trigger. We'll say breakthrough. I'm going to turn sensitivity off because I actually want to see price actually making that new high. And then when I go to confirmation candle, I pick my time frame. Now, presumably, you want this as soon as you need it. If you set this to the 10-minute time frame, then it's going to look for a 10-minute break, right? Price closing below that line on the 10-minute time frame, or rather price opening below that line, closing above that line, and then opening the next candle above that line will trigger a 10-minute alert. If I absolutely need to see the daily candle close above that high to even be interested in it, well, then I'm going to set my confirmation candle to the daily time frame because I don't care if it just like closes above for 10 minutes. I need to see the daily close above that level. I won't get the alert until the end of the day, but I don't care because I only want to know if price actually breaks above that line on the daily, right? Like closes above that line on the daily. So it's really up to you. There are no rules. It's a matter of what makes sense. Is there a way to get an alert that the price has gapped above your price level before market opens? So you'd want to use extended hours. And you would have to, let me think about this. Say this is my level. So in order to utilize extended hours, put your chart on extended hours. And then you can do it. You would want to use a small time frame, right? Trendline alerts utilizing extended hours, market data must utilize a confirmation candle time frame equal to the time frame of the chart the alert is created from. So whatever time frame makes sense for you, if you want to receive that alert, presumably you would want to receive that alert as soon as possible. So create alert, etc., etc. Does that make sense? Another thing that you could do, let me think about this. You could, if you wanted to, you could use a actual multi-factor alert. And let's say the price is, I don't know. Let's say the price is $50. In theory, what you could do is you could say price close, price, I don't know, 5-minute close greater than a constant value of $50. You're using extended hours. Choose how long you want it to live in your system, how many times you want it to trigger, and then create the alert. So you can do it either way. All right, so as I was saying, if you're enjoying these shows, you find them useful, you find them helpful, you want to see them keep on coming, keep on happening, it's up to you. We need subscribers, we need viewership, we need all these numbers to continue ticking up and to the right, like our account balances. So yeah, tell your friends, let them know. And again, it is Easter time, and at Easter time, we like to have sales. So right now, I'm going to tell you guys, this is the silent pre-sale. If you're not yet a TrendSpider trader, first off, what are you doing? Sign up. And sign up now, because there's a really great deal going on. In fact, it's better than we're going to offer for Easter. Shh. You guys know that now. And that's my little secret between you and I. Take advantage of this if you're interested in it, up to 67% off for these yearlies. I hope that you all have a fantastic Easter holiday with your loved ones. And I hope the weather's good. I hope you get to go outside and enjoy some fresh air. I hope you get to find time to do some chart analysis. If you need anything over the weekend, you're curious about anything, hit me up. I am at Krutzky Trades on Twitter. My DMs are open. I'm happy to answer questions if you have them. So hit me up. Thank you all so much for tuning in today. It's been a pleasure hanging out with you guys. It's great to see a good number of y'all in here. I appreciate the questions. Play around with the ideas that I just gave you over the last hour, and we'll come back. We'll do it again, presumably on Monday. All right. Sounds good. Sounds like a plan. I think we're good to go. I hope you guys have an awesome one, and we'll see you very soon. All right. Take care. Bye.